Hi, I'm Wes Walker, one of the full-time fiduciaries on staff at Tony Walker Financial. And while Tony was on the subject of taking a time out, I thought it might be interesting to talk about the most well-known investor of all time, Warren Buffett, and his time out. Looking at their most recent annual report, Buffett's holding company, Berkshire Hathaway, has increased their cash holdings from about $168 billion in 2023 to $318 billion in 2024. In 2023, cash represented about 16% of Berkshire's total assets, while now they represent about 28% in total. So in summary, cash equivalents at Berkshire Hathaway have nearly doubled over the past year. What could this mean for the individual investor, and in particular those who are concerned about market volatility? We never recommend timing the market. It's not a good strategy, and it's best to assume that you are not Warren Buffett and able to time these things of when to get in and when to get out. But some potential reasons that Buffett may be hoarding cash these days are the valuation of public equities, just meaning that stocks appear to be expensive in Buffett's eyes. 2, higher yields on short-term risk-free investments like treasuries, i.e. cash, safe investments. And 3, limited acquisition opportunities for Berkshire Hathaway in their wholly owned business divisions. So what can individual investors glean from this information? Well, 1, it's important to be cautious about overpaying for stocks. You should always look to be sure that you're not paying too much for the earnings of an individual company, and I think that's what Buffett's concerned about in this instance. 2, holding cash is not always a bad thing. It can give you liquidity for if you want to make a purchase in the future, or if you need it and you're just an individual and not a corporation like Berkshire Hathaway. 3, you can take advantage of higher yields like we talked about with treasuries and even more risk-free investments if you're an individual investor like annuity contracts and other things in that vein. And then lastly, it's just best to be prepared for market volatility. So not trying to time the market, but making sure your asset allocation is appropriate before you even make any investment to begin with. If you feel like you could use a review or would like to talk this over with Tony Walker Financial, we'd be happy to talk at any time.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.